Good afternoon, traders. Joseph here from Eightcap. Welcome to this week's Trade Zone weekly wrap. So we'll start with the dollar, and we can see that it's been another week of declines. There is a little bit of a pause down at this area at the moment, but so far this week it's been a real run away from in particular the two safe havens, but the yen has really been nailed this week, and we can just see here in this comparison with the dollar being very weak during the past week. Sorry for the so many words of week there, but we can see that we've had some pretty good buying against the yen from the dollar, and the yen's definitely been pulling back. And probably one of the reasons for this is that maybe the banking crisis has started to die down now. Maybe it's been a touch overblown. It has been said that a few analysts were calling it overdone, and especially on the Dow, and maybe we're starting to see that now with risk markets firing back. It was a solid week, basically all round this week for risk markets, and reflected as well with gold. Like we saw gold have a couple of good days this week, yesterday in particular, but you can see it wasn't the most decisive session, and we compare that to roughly a week and a bit ago, where we can just see that one-way traffic, with the banking crisis unfolding, and traders really looking to move their money to somewhere. And the yen as well was really caught up with that late, probably in the crisis. We can just see here a lot of demand for the yen, and if we just go back a little bit on the dollar yen again, we can see that demand there as the dollar was going lower with stocks during that period. So we'll just touch on some of the keys this week. So we didn't have a heap of key data. Consumer confidence, CB consumer confidence came in higher than expected. We had Australian CPI data that missed expectations at 6.8%. This feeds into next week's rate decision. I think a lot of people are starting to talk about a hold now. I'm probably leaning as well to a hold, just with the pressure that the RBA has been under, and the governor of the RBA publicly and politically. I think that there could be a possibility that maybe we see a hold, but look, it is still at 6.8%. It's not really a low figure, but maybe they may just take the foot off the gas, just to give people in Australia a bit of a break in terms of increases in mortgage repayments. And the Aussie, we can see here, I'll just jump out of the weekly. The Aussie, we can see it's had a decent week, and not as good as the euro and the pound to the dollar, but even with that CPI miss, and with the talk about expectations of rates being held next week, it still has been able to put on some gains so far this week. So during also we had the the German Prelim CPI came in lower than expected. Now, revise that. The Prelim CPI came in at 0.8%, so it was above expectations, and I got that mixed up with the Spanish flush CPI, sorry about that. That was at 3.3%, lower than expected. So with that Prelim CPI coming in higher, we have seen the euro to the USD having a very solid week, and we've seen nearly a test of those previous highs up at 1.0929, and if we do see the dollar continue to push lower tonight through the London New York session, maybe we'll see the euro once again test that level. There's been 3 tests now. Haven't been able to break it yet, so if we do see buy momentum later today, hopefully we can see buyers make a push above that point. Price is quite far away now from the averages, and at some stage you will expect to see prices to make a revision back to the MAs. Unfortunately, you just don't know when that will happen. But so we'll see if buyers can get above that resistance later today. Now, we had final GDP for the US that was at 2.6%, slightly lower than expected, and unemployment claims came in slightly higher at 198k. And we also had a bit of a miss with the oil inventories as well during the week, and we can see here with crude, the crude's continued its pace. There still continues to be a bit of talk that China could be one of the key drivers for demand for oil. So these all combined has seen oil pushing back up above 74 this week. And just on China, so data today came out. China's PMI beat expectations, so the manufacturing PMI beat expectations, which is a good sign that things are starting to get back on track post-COVID. And also there's been a lot of rumblings this week about the Chinese yuan. So Brazil has actually done some foreign currency transactions with the yuan, and Saudi Arabia is also starting to move a little bit closer to China, and there is now a bit of talk popping up and down this week about the yuan possibly one day replacing the dollar as a reserve currency. Obviously this is all just talk at the moment, but definitely some interesting signs coming on, and there is a bloc now of members who are starting to form, including Russia and China, Pakistan, and some other Central Asian countries, which are all starting to form a bit of a trade bloc. And there is talk about, will more countries look to join that, and what pressure and stress will this put on the US. So China's also, if you didn't know, it has really toned down its US treasuries, and there is a lot of talk that they're going to continue to push the yuan to a more forefront position in global economics, and possibly, who knows, if it would ever replace the dollar as the currency most used. But we'll have to see what happens in the future with that one. But there is some interesting talk this week, so definitely check it out. Some interesting reading as well, definitely with some of the changes in relationships that have been occurring, especially with LATAM in South America towards the Chinese yuan as well for trade. So just finally as well this week, so we have Canadian GDP coming out. We're looking for 0.4%, and the core PCE price index for the US. So that's another inflationary piece of the puzzle, and traders will be looking at that one. It's expected to come in at 0.4%, lower than the last 0.6%. So any misses there as well, and that could add a bit of pressure to the US dollar. Now on to before you go on to next week, we'll just cover a few things here. So I'm just going to put it back on the weekly so we can see a few of these charts. So, and we can just see how wide-ranging this recovery was this week. So we can see here the yen, majors to the yen really did the most damage FX-wise. So we can see the euro and the pound there. The Aussie as well had a pretty good week as well to the yen, even though it had a little bit of downward pressure from the CPI. And we can see here with the pound now, the pound's hitting a pretty interesting spot right now. This is a resistance level that's going back to, into October, December last year was the last high, and we'll be looking to see if they can break that high. It's a pretty key bit of resistance, which has held buyers back for a decent period now. We've seen a couple of rejections off that level already. With a double click. So the euro as well is starting to get back to a point that we saw back on in late January when we had that last run up, and if we can see, we have got a close here, but would really want to see if we can have another, maybe if we do have a pullback, another push higher to test and break this level here. So there's a bit of decent looking resistance there at 1.1040. So it's still quite amazing, isn't it, if we consider back to September last year that the euro was below parity, but look at it now, it's really come back quite firm. And the Aussie as well, we've touched on it a couple of times, not as pretty as the other two. It's still a bit of a consolidation here at the moment in this downtrend, but we do have a higher low after this trend break here. So continue to see if some drive can come. If they do put rates up again next month, it still might not have a big impact on the Aussie, as it may be factored in as, or priced in as possibly maybe a last one before holds come in. And if we do see a hold, probably we'd expect maybe some downward pressure after the release as well. So just going over to stocks, stocks have had a very solid week this week, making it the second week in a row of gains. There's the German 30 here. We'll be looking to see if it can surpass this 15,620 resistance on the weekly, and then once again we'll be looking to see if price can get back up to test some highs, back in that 16,000 area. So first step first though is this resistance here. And over to some of the other European indexes, the CAC as well. A bit more work to do to get back up to this resistance area. But once again, if it can, we'll be looking to see if it can break above that level, and then it's off and running again to very high levels, not really seen since back till to January, and then again into February. So now the UK 100 as well, it had a much deeper correction than some of the other indexes. It hasn't pulled back as much yet, but we'll just have to continue to see how it fares. And we do have this break here, and there's it's still in a downtrend here, but we'd still have we have a fast trend break here, a higher low, and a break of this point here, which is a pretty decent sign. And US 30 as well. So US 30 has had a good week so far this week. We can see a lot of strong buying, but compared to the SPX and the NDX 100, it still has a fair bit of work to do. The NDX we're going to touch on here, because not only have we seen another positive week with new fresh higher highs, we've seen a break of this resistance level here at 1290, and we're seeing prices trading back into the 1300 area again. So very strong on the Nasdaq at the moment, and this trend looks to be setting up with a new higher low confirming with a new higher high. So good signs there as well. Now just quickly, we're going to look at a couple of the crypto coins before we wrap up. Try and keep it within a reasonable time frame today. Bitcoin we'll jump over to. So Bitcoin's had a bit more of a flat week so far this week, but weekly chart wise it still looks pretty solid. We've got this break above resistance, and if we just go over to the daily, this is the area that we are keeping an eye on at the moment. This is your really medium to key resistance right now. It lines up with a previous high, previous level of really consolidation and congestion, but that also did kick off a very big sell-off as well. I'm not saying we'll see that now, but definitely there's a lot of indecision at those prices, and there's a lot of deals being going done there, and it doesn't look like there's a lot of true direction at the moment, and we'll just have to see if Bitcoin can actually hold and close above 29,200, just to sort of really show that buyers are in control, because at the moment resistance at 28,420 to 28,500 looks to be quite firm and holding a lot of momentum back. So we've seen quite a few pushes like in the last couple of weeks, and they've all been rejected at the moment. And Ethereum's in a similar position as well. So we can see here that they've had another push here, but there is a lot of indecision anytime the market really gets above 1800, and anywhere above that we're seeing a lot of pushbacks from sellers. So this area as well does go back to a couple of areas here, and then this area here as well. Even though we did have that one break there, we are just seeing consistent selling every time, and heavy selling as well every time buyers try and take price back above that 1800 area. So there are a couple of areas to watch on the two real key crypto markets. And next week we'll just touch on some of the keys. We have a lot of bank holidays for Easter, obviously, with Good Friday on April the 7th. We have Canadian unemployment and US unemployment claims on Thursday, ISM services PMI on Thursday as well, and we have the ADP non-farm employment change on the Wednesday, and one of the interesting ones will be on Tuesday, which is the RBA cash rate and rate decision. So that's one I'll be keeping an eye out. And we also have Wednesday the Reserve Bank of New Zealand rate statement and official cash rates. So, but the RBA could be an interesting one if they do actually hold rates. So we'll be keeping a watch on that one. And then also to start the week, we have a daylight savings shift, so it is officially the end of summer for Australia as we move back to we move back out of daylight savings time in some states. So, and there's also a bank holiday in China on Monday as well, and Swiss CPI is on Monday as well. But probably one of the biggest one of the week next week will be on Friday at 10:30 p.m. So that does make my life easier, because the news articles are now coming back. The key news in the US is coming back out at 10:30 p.m. as opposed to 12:30 a.m. and that will be the US non-farm employment change, average earnings, and unemployment. So we'll do a bit more of a talk on that on Monday, as we get some some forecast data coming in. So there's some of the key ones to look out for next week. That's it for this week. I hope you have caught some of the strong, decent moves we've been seeing so far this week, and we wish you all the best for the weekend. Thank you very much for your time. Feel free to subscribe if you do enjoy our content. We'd love to see you following us. And until next Monday's Asian session update, have a fantastic weekend. Thank you, and bye for now.